A couple of weeks ago, we did a BBB conversation about the big, beautiful bill. We got some interesting updates we want to talk about this week here on the podcast, so let's get into it. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist, Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into Phil's Tax Hacks and Other Retirement Facts. And Phil, you and I were chatting before we got started. You were listening to that episode we did a couple of weeks ago, and information was messed up by the government itself on the website. So we want to kind of clarify some things. So what'd you find?
Yeah, it's funny. I mean, we had talked about be careful where you get your information. And, so I went directly to the government website and rather than read through the entire bill, they had a summary, of kind of the key points of each one of the sections in the bill. Figure that's got to be right. Correct? Well, not necessarily.
Of course.
So be careful where you get your information and double check it. So, and it was right after it happened too. So, now that we've had a little bit of time, it's been a little over a month since everything's been out.
Yeah.
So I've gone through, I use a tax service to do all my research, and they've come out with a summary of the bill. So I'm trusting that what they have is correct. And I've gone through and done some double checking on that to confirm it with more than just them. So I think we're good. So a couple of things that came up that were different. Number one, there were some things that we were presenting in the summary that were actually 2026 numbers versus 25. One of them was, for instance, the SALT deduction. So state and local tax deduction currently under the Tax Cuts and Jobs Act was $10,000. We talked about they've raised that now to $40,000. And I was saying, the summary says $40,400. Okay, well, $40,000 is the 25 number. $40,400 is what it's going to index to for 2026. So it is for 2025, $40,000 is the new threshold. So good news. And then it does still phase out at your modified adjusted gross income being $500,000. But now we have a little bit more clarification on how that phase out works. And basically how it works is that the amount of modified adjusted gross income above the 500,000. So for instance, if you're 100,000 over, you're at 600,000, then you lose 30% of that 100 or $30,000 of the 40, and it drops back down at that point to 10, and it can't go below 10.
Right.
So if your modified adjusted gross income is between 4 and 6 or 5 and 6, you're going to end up not getting the full 40. It's going to drop down to at 600 to 10,000. So,
gotcha.
So anyways, just some clarification on that. One of the other key points that came up that there was some not clear numbers on was how the whole standard deduction worked. So and we'll just stick with married filing joint. The married filing joint standard deduction was $30,000 for this year. They have updated it as part of that bill to a $31,500. So that's the new standard deduction.
That's the standard baseline, right?
Just baseline. Then in addition to that, and this hasn't changed, this was there before, there is an additional $1,600 per person over age 65.
Okay.
So those are the two new standard deduction for baseline, the $1,600 per person over 65. Then in addition, there's a $6,000 per person over the age 65 of additional deduction. Now, when we had our discussion, the way the bill summary is laid out, it said it was 4. Mm-hmm. And they had somewhere in there where there was another 15 or 2, but it wasn't clear how it worked. At the end of the day, it is $6,000 per person over the age of 65. So if you add it up for a couple over the age of 65, they now can have $46,700 of standard deduction, so to speak.
That's pretty high.
So it's a huge number.
Yeah. So in a way, it does kind of. That was the kind of the hang up as to we can't just go ahead and cut Social Security, taxation.
Well, right.
But
so the 6,000 extra was kind of a give me to help offset the blow of not being able to do no tax on Social Security.
Right. And it phases out. There are some income phase outs for that extra piece. That's still correct.
That's still correct. We talked about that. And that's a temporary piece. So that extra 6 is only for 25 to 28. So the next 4 years. And there is no indexing for inflation. So the base standard deduction, the additional per person over 65, those do get indexed each year for inflation.
Okay.
The extra 6 does not. one of the interesting pieces that came up when I was doing the research on that is that in this, again, the tax summary from the tax service I use, the code section that is referenced relating to the extra $6,000 per person actually is not under standard deductions. It's under the personal exemption. So it brings up an interesting kind of caveat that potentially so the personal exemptions went away with the Tax Cuts and Jobs Act, and the BBB actually made that permanent. So standard deductions are gone. But this additional $6,000 per person over 65, if they count that more like a personal exemption, then it lowers the threshold for a standard deduction. So somebody might still itemize and get the $6,000 per person.
Gotcha.
So even though we got some clarification, there's still some muddy water out there.
Yeah.
We got to see at the end of the day when the tax forms comes out, how does all this play out on the form? So I'm thinking the way this is kind of worded in the code section that it is a personal exemption. So you might, if you were kind of hovering around that 33,000 with standard deductions anyways,
right?
You might still get a standard or itemized if you're above that and get the extra $6 per person. So,
wow. So to me, this sounds like an unofficial government advertisement for CPAs.
Yes. Well, and this is pretty typical. They pass bills. There's all these pieces in there. No one's read it, right? The whole thing and put it all together. So now at the end of the day, everyone's trying to figure out, okay, what did they do? And the IRS has to come out with clarification on how they're going to interpret this and then actually, make it work in the tax forms. So we just be careful in making big decisions on this until we get more clarification. We've got some pretty good guidelines.
Gotcha.
So
this reminds me of a funny conversation I had with a business owner and a friend of mine, a chiropractor. She's her staff. I was over there visiting with her, waiting for my turn, and her staff scrambling around out there doing things. There's nobody left to be serviced except for me, and I'm good friends with them, so I don't think they worried about saying anything in front of me. And so basically, long and the short of it is she just said, "Hey, I've got this idea for promotion," and just threw it, and went ahead and marketed it, put it out in an email, put it out in a text message to clients, and the staff's left to figure out how to make it work.
That's right. That's right.
Sounds very similar to this kind of thing. Hey, we've got, all these senators and Congress people put all this stuff together. They go back and forth, and then they go, all right, now you guys figure it out.
That's right. Here's what we passed. Tell us what we did. How does it work out?
Exactly. So, hope it works out for you.
And one other quick topic in there is charitable contributions. So one of the things the BBB did with a tongue twister, is it added a floor for charitable contributions. So similar to like medical, there's a 7.5% of AGI, right? So you only get to deduct the amount that's over 7.5% of AGI. Well, charitable contributions, similar, it's only 0.5%. So if you had $100,000 of AGI, you're going to lose $500, so to speak, of your charity. Only the amount above 500 counts as a contribution.
Gotcha.
So the medical, that floor, the deduction is just gone. So with the charity, though, this amount that is that floor gets carried over to next year. So it's like a charitable contribution carryover. So with charitable contributions, you can only deduct up to 60% of your adjusted gross income if you're very charitable. So if you give a lot in a year and it's more than that, that extra amount gets carried over. So this kind of falls into that category and can potentially be used then the next year or the year after. You got 5 years to carry it or to use it. So that's one change. And then the other thing is going to be, even if you do take a standard deduction, in that summary, they were saying that you're able to take, I think it was only $400 for charity for married, or $600, I forget the number in that summary. Bottom line is you're able to take $1,000 for single, $2,000 for married filing joint. That is
above the
real
line
number.
Without itemizing.
Above the line without itemizing. So it's similar to what it used to be back when we went through, drawing a blank, back in 2000. COVID, there we go.
Yeah.
That thing. How can I forget that? Where they gave this additional, at that point, it was 600 married, 300 joint or single, for above the line charitable deductions, even if you didn't itemize. So this is the same thing, except for it's not temporary like that. This is part of the law now.
Yeah.
And it's 1,000 single, 2,000 married filing joint.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. you will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of The Tax Smart Retiree right now.
Well, I guess to that point,
That's
right?
pretty
If you got that 46,000 standard deduction, if you're a senior over 65, but you're still charitably inclined, you can't itemize, and you want to give $2,000 as a couple to your church or something, there you go, right? So
yes, I mean, there's bottom line with all this is there's a lot of, like anything, right? When they change something, there is no simplification. It's added a whole nother layer of complexity.
Yeah.
Understand how these work, what the pros and cons and options are. Work with a professional to determine, especially like with charity, how should I be giving my charitable contributions? Should I be using qualified charitable distributions? There's all these different things you can use to take advantage of the tax law to get the most out of it that you can. So,
well, at the end of the day, again, I think it's a nice little promo for CPAs, turning to someone who's keeps their nose into this stuff so they can stay abreast of all the fast and furious changes. And of course, if you need a financial blueprint, that's basically what Phil calls his process there. So get onto the calendar, come in for a consultation as a CPA and a personal financial specialist. So get yourself onto the calendar and come on in for a consultation and a conversation with Phil. We got links in the descriptions below, and that way you can get some time onto his calendar. Don't forget to subscribe to us on Apple, Spotify, and of course YouTube. And we'll see you next time here on Phil's Tax Hacks and other retirement facts.
Phil?
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.